Alright, this was Friday's trade. Alright, so here on the 1 hour, we have our 7 a.m., 8 a.m. for you guys, so I'm an hour behind. 8 a.m. highs and lows. So 8 a.m. high and low. We mark those two out. Then we come to the 5 minute. And on the 5 minute, this is market open right here. This is market open right here. Market open. What we want to do with this God Eye strategy is mark out the first structure. So as soon as market open, we came down, we made this low here, and then we came up and we made this high right here. And what we want to do is see what price is doing here, right in this box. What is price doing in this box? But something to keep in mind is what liquidity are we taking out? In this trade, we didn't take out liquidity, but we have this 5 minute fair value gap right here, right? So this 5 minute stretches all the way across to market open, as you can see. Let me remove this one because the same thing happened today's trade, Monday's trade. Anyway, so we have this 5 minute fair value gap right here. Let's just write it out. 5 minute fair value gap. We have this 5 minute fair value gap here. Price opened, came all the way down to fill this 5 minute fair value gap, and then it shot up and we bought. And I'm gonna show you here why and how we bought. So price opened, right? Came down to this 5 minute fair value gap. So it came down, we marked that out, the low and the high, and we're seeing what is price doing within right here so that we can get in the trade, right? What's price doing in this box? So in this box, we can see, let's just move this fair value gap out of the way so we can see clearer. In this move, we can see price came down, came up, so low, high, lower high, lower low, or equal lows, low key with the wick. Higher high, higher low, higher high, or equal high, and lower low. This is necessary. This is necessary. Why? I'm going to explain to you guys something that is like key. This is another insight. This is another insight of the strategy. I don't think this one in the 5 minutes is a really good example, but I'll show you what I mean, even if it's just a little fraction of the example. I'll wait, or maybe over the weekend I'll give you guys like an actual example of what I mean. But it happens every day. You just gotta count it right. So check this out. So one thing that we have to see in these reversals is this type of SMT. This type of SMT forms all the time, or almost all the time. It's either like this or like this, right? And one thing that we see for sure almost all the time is a liquidity sweep before it reverses. So some people would see price come up, come down, create this little fair value gap here, and get in right here, right? And get in right here and buy, like right at this fair value gap, right? Fair value gap. But there's no liquidity under this zone or this zone. So you have to wait for price. With this strategy, you have to wait for price to come back down and take out this zone or this zone. Sometimes it's this one and sometimes it's this one, but there's some type of liquidity. Price will come back down and take some type of liquidity, and it will give you another fair value gap, which is the actual run, the actual fair value gap that's gonna take off. Like over here in today's trade, you can see it as well, right? You can see it as well in today's trade, just to give you guys an example, 2 examples. So I know it looks a little messy here, but just wait on, just look at it. Just look at price, okay? So price open right here, right? Price open, Just follow me so you can know what I mean. So price opened, came down, created this low, or this low, right? Because we mark it at the wick, created this low, and then it came up, and then it came down, and look, it created this fair value gap here, right? So people are like, oh, price is gonna reverse, and they go in and get in right here, and this inverse. So price came up, right? Keep on following me. Price came down, created this inverse, and then inverse it to the upside. So you're like, okay, price is gonna buy, boom. But no, you have to wait for this liquidity. You see how I have it marked out here? Let me make it bolder. You have to wait for this liquidity to be taken out. So it created all this right here. So it came down, came up, came down, came up, came down, came up, and like it still hadn't taken this liquidity. It still had taken these liquidities. So it came up and then it came down and took, you can't see it here, but let me just move this, right? Let me move this out of the way. You see this wick right there? You see that wick right there? It came down and took all these liquidity, and then it came up. Then it came up, came down, and it formed this fair value gap right here. This fair value gap didn't get inverse to the upside, so that's why it didn't get in. It didn't get inverse to the upside. It came down again, and then it got inversed, and that's where I got in, and then we bought. So again, this zone right here, this liquidity thing is a huge win because you're not getting in too early. And on the 5 minute, this is how that looks like. Like on the 5 minute, what's a good example? Whatever, we'll just use this one for now because this is like a good example. It's not a good example because it's only candles making the move, but it is. But let's just go by candles, right? Usually you want to go by full moves, and I'm gonna explain what I mean. So this insight might be a little bit complicated for you guys to read right now, but it's a crazy insight. So the moves, the actual move of this strategy happens on the 4th or 5th move, and I'll tell you what I mean. Look, price came down, that's 1 move, right? Price came up, that's 2 move. Price came down, that's 3 move. Price came up, that's 4 move. Price came down, that's 5 moves. So and I know I'm counting it by just 1 candle, but you don't want to, most times you don't want to count it by just 1 candle. You want to count it by the overall move. Like let's say here, right? Let's say here, like let's just say price open here, right? For instance, let's just say price open here, and you want to see, you can see the overall move as this, like 1, 2, 3, 4, 5, and here you will see the actual move, like the actual trade. Like let's just say even here, like you see a fair value gap right here. This fair value gap gets inverse to the downside, and then you take the trade, right? So with this strategy at market open, that is high key what I saw that it really works that way. Like this strategy really works that way on the 4th to 5th. Let's just go down to the 1 minute, and in the 1 minute you see a lot clearer. Check this out. So 1, right? 1 down 1 move. 1, 2, 3, 4, 5, and in the 5th you see this fair value gap, but this is not to be counted on the 1 minute. So I just gave you guys that as an example, just how you guys should be able to see it on the 5 minute, right? It's not always gonna be like that because today wasn't like that, but counting this and this liquidity thing to be taken out before the actual move happens, it's valid. Like this just makes the entry so much cleaner, and you don't have to rush and get into trade because you have to know that there's going to be 5 moves. Either it's going to be done 4 to 5 moves before I actually enter on the 5 minute. Either that's by candle, as it was today, 1 bullish candle, 1 bearish candle, 1 bullish candle, 1 bearish candle, and then it happened, right? Or you're gonna actually see 1 big move on the 5 minute, another big move on the 5 minute, and another big move, like a couple candles, maybe 2 to 3 candles on each move, on each leg. I call it like legs, right, or moves. And then you have to see this liquidity be taken out. You have to see some type of this right here, some type of internal liquidity. This is called internal liquidity because on the outside we have these. Oh, right, we had this, like as soon as market open, we had these lows right here, right? We had this lows. We had this lows. We have to see where is price when market opens, where is price taking liquidity. So market open and price took all this liquidity right down here, and it also filled this 5 minute fair value gap, right? And it respected it. It didn't inverse it to the downside. So we're like, okay, cool. And now price is inversing this fair value gap to the upside, so we know that price is reversing. So price is price inverse this fair value gap right here, and it bought up. And where are we buying? Where are we buying to? Okay, well, we have this 5 minute fair value gap right here. Let's just go here. A 5 minute fair value gap right here. And we have, I think this is a 1 minute fair value gap all the way up here. And yo, honestly, after today, I'm trusting my trade. It's either TP or stop loss, bro. Like, for real. You know why? Because I knew that price was gonna come up and touch and tap this overall fair value gap right here. I knew price was, and look at what it did. But price came up and then it started coming down, and I'm like, oh snap, like there's some 1 minute fair value gap down here, so I didn't want it to come all the way down here and then go up. But nah, bro, you gotta let price play out, bro. Look, literally the trade happened. Literally the trade happened right here. Look, the trade happened. Boom, all the way up. Yeah, right there. Boom, like right up here. So it hit up here, and I didn't even I didn't hold it. And it happened to me again today too. So I'm done. Like, I mean, it's fine. I secured profit. I made $500, as you guys saw in the video. I can play it again. I made $500, but bro, like price is gonna go to those levels. Price is definitely gonna go to those levels. If you believe that price, if that's what price is going to do, price is definitely going to do that. It's definitely gonna go up to the levels that you marked out. So yeah, the strategy is so clean. This was today. I hope I'm going to keep explaining this liquidity thing and the 5 move thing. I hope you guys saw like a picture of the new insight. But like, bro, this helps so much because you don't have to go in earlier. You know, you don't have to go in too early. You know that there's gonna be 1, 2, or 4 to 5 moves before you get your entry. And in those 4 to 5 moves, they're gonna be a liquidity which you don't get trapped in, because you don't know how far that liquidity is gonna go. You don't know if it's gonna stop you out or not. You wait for that liquidity to be taken out, and then as soon as it inverts that fair value gap, what has usually happened is just that it goes, bro. It literally just goes. It doesn't happen all the time, because today it didn't. Not this day, but today, Monday, it kind of came into our zone. We were in drawdown a little bit, but then we came up, and I literally cut it short. I literally cut the trade short again, but it literally went to where I, intended for it to go. But yeah, this was today's trade. Hope you guys liked it, and hope this new insight serves you, like, because it's making my trades a whole lot cleaner. So yeah, God bless you guys. Jesus is King. If you haven't received them, I hope that you receive them. And yeah, God loves you. Peace.